Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Yeah, let me just hit record and we're good to go, guys. Let's have some fun tonight. Go for a couple hours.
Recording in progress.
Thanks everyone for joining Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you guys for coming back to see us. And we took last week off. Well, I took last week off. My daughter was sick, so I had to take care of that situation, and she's feeling much better. Now we're back into the markets, guys. So this week, what we'll do is we'll stick with this session, the Tokyo sessions. We'll focus on swing trading. Okay, so we'll focus on higher time frames. What we'll do is we'll start off with the daily, and then we'll move it into the 4-hour, and then we'll kind of monitor the 4-hour analysis. We'll see maybe some possible buying opportunities, maybe some selling opportunities. And what we'll do is we'll do multiple securities. So we'll get it started with 4 tonight. I was thinking of we do a nice analysis on gold. Gold is, wow, look at this. Look at gold right now, how it's driving on the daily. Be very, very careful trying to short sell this thing right now. Probably not the time. There is little pullbacks, but there's no break of structure yet. So this thing is still driving higher highs and higher lows. Possibly hit 3,000. It's not too far away. It's only about 70, 80 bucks away from hitting 3,000. It could definitely squeeze all the way up there. So we'll look for maybe a move to 3,000, but keep in mind your quarter increment moves, your 29.25 where we were just kind of trading at the high right now, 29.50, 29.75, and then 3,000. Andrew, 3,500 by end of 2025. Yeah, I could possibly see that. So we'll talk all about that. There's lots to talk about, guys. Also, what we'll do is we'll do U.S. oil. We'll look because crude oil is in the news. Maybe we'll do a nice analysis on that, see what crude is trading at. And then we'll throw some indices in there. Obviously, we'll throw NASDAQ and Dow Jones in there, okay? And then we'll go with those for tonight. And what we'll do is we'll monitor these throughout the entire week. So if I encourage you guys to join us all week if you guys can, so that you can see how things are developing throughout the week and ask questions while you're at it, okay? So thanks, guys. So we got the record. Everybody can hear me okay? Audio is good because I haven't even started my computer in like a week. So I just want to make sure I'm on the right screen. You guys can see I'm on the gold on the daily, and you guys can hear me all okay. I had some beats in the background. I just turned them off. Maybe it was going to be distracting. Maybe tomorrow we'll put some little bit of beats in the background. But first session back. Let's take it serious tonight, and let's do some charting, okay? So thank you everyone on Zoom. I appreciate all of you guys. I appreciate all of the words, the messages, everything, guys. I appreciate you guys. So thank you. Lady Stone, thank you for joining. Abdullah, welcome. Thank you, David. Thank you for joining. I appreciate you guys. Everybody, welcome, guys. And everyone on YouTube as well, all of you guys, thank you for joining. Asan, welcome. Mark, thank you for joining. Abdullah, welcome. Tony Gold, thank you for joining. Habibi, thank you. I hope everything is going well with you and your family. Andrew, thank you for joining. Ramzella, thank you. Toys and Trucks, good morning. Andrew, welcome. You haven't looked at a chart since Thursday last week? Me too. Welcome. Louise, are we going to hit gold 3K this week? Definitely. It looks like it wants to maybe go up there, but it could be getting a little bit overbought on the daily, on the weekly. But it could continue to squeeze its way up there. But we will continue to monitor it. But 3,000, yeah, it's eyeballing it right now. Could definitely get there this week. Meldon, welcome. Good morning. Good afternoon, I should say. Good evening. Maybe good morning to you if it is. Trev, welcome. Thank you. I appreciate it. Miss Jones, welcome. Mr. Jones, sorry. Okay. Welcome, Blaze. Okay. So guys, what we're going to do is we're going to get started. Before we get to the charts, let's talk about this week's news. Hopefully you guys followed last week's news. You're going through your folders for all sessions. If you're trading London, if you're trading New York, if you're trading right now, this Asian session, make sure you're looking at your specific folders. You're looking for your high volatility folders for specific currencies or specific indices that can move, because as you guys are getting better and better at trading, you guys are learning that you really have to manage your risk in order to continue to trade in the markets. Otherwise, you will get liquidated and you'll either lose all your money or you'll blow up a prop firm account or just those silly things. So make sure, as always, we're managing our risk. It's part of your job as a trader. So you need to really learn that aspect. So we'll go through this week's news. Last week we had NFP. We'll see what big news we have this week. Earnings. Okay, so last few weeks we had tech earnings, which were big in the markets. Okay, you had some of your big names. The last week and a half have been reporting. What names do we have reporting this week? Is it going to continue, or are we going to get a little relief from some earnings this week? Okay, so we'll get started with that, guys. Always at the beginning of the week, you should be doing some type of market analysis so you know what you're trading into, so that there's no surprises. Okay, and today Donald Trump was speaking about he adding tariffs, 25% tariffs on aluminum and steel. So that's another thing why we're probably seeing lots of volume going into gold, is due to there's no tariffs on gold right now. So aluminum and steel, he might put tariffs on copper and things like that. So right now, a lot of investors are maybe eyeballing gold and moving money into this security. Okay, so let's get started with Forex Factory. Some of you guys maybe have already done this. Okay, and then I'm going to do it for everybody that maybe hasn't done this yet, but also for myself. I got to do this for myself and see what's going on this week. Okay, so this already happened. This is Monday. Today. Earlier we didn't have too much news except for this. This was the USD red folder, President Trump speaking today. And when you see tentative, you basically don't know the exact timing. It could be any time throughout the day, but news was saying it was in the afternoon today, so after 12 p.m., 1 p.m., 1:30, 2 p.m. And you guys know, pretty much you guys are probably getting familiar with Donald Trump now. He has no filter on his mouth, and he basically says anything that he wants, and the markets move with this gentleman that speaks right here. So you have to somehow, if you're trading the markets, you got to pay attention to whenever this gentleman is speaking, because he can create a lot of volatility. So just pay attention to this. You don't really have to understand or get into what he's saying or agree with what he's saying or disagree or whatever, but just be aware of when he is speaking, because there could be some volatility in the markets. Okay, and then right now, as I'm speaking, the Japanese banks are on holiday all day, so the Asian session might be a little slow moving, especially if you're trading the Japanese yen, because all Japanese banks are closed today. There's still futures are still moving, but if you're trading anything to do with Asian pairs, Asian indice, anything with the yen pairs, could be a little slow tonight because they're closed. Okay, so that was already today. Let's talk about tomorrow, something that we can look forward to. If you are trading into the London session, that's the first session from Tokyo. We move into Europe. Then you're going to see some European folders. I don't see too much. I see some news coming out of China, tentative news again. We don't have the exact time of when they'll release this, so it can be any time during the Chinese session. So if you're trading anything to do with that, keep an eye on this. I was kind of mentioning a couple weeks ago, maybe a month ago, to keep eye on volume moving into the Chinese markets, and I gave a name of Alibaba, to keep an eye on Baba. At that time, it was trading at $85. Now it hit some highs around 110 since then, and it was a good opportunity to maybe start a position in Alibaba at that time, and to anticipate volume coming into the Chinese markets with everything that's going on with US. So There will be other opportunities. We just got to continue to do some research and figure these out as a team. And then over here, so we don't have too much news coming out in Europe in a little bit, a few hours, but we do have some British news at 7:15 a.m. Eastern. So this is right before, this is pre-market in New York. Bank of England Governor Bailey speaks. Okay, so it is a red folder. GBP is, you guys know, it's the British pound. So pay attention to this. If you guys are trading the pound, if you guys are trading the euro, if you're trading the FTSE exchange, anything to do with in here, the British pound, be aware that you got the Bank of England Governor Bailey speaking. So that could cause a little bit of volatility in that pair. Okay. And then as we move into our North American session, we've got COMEX market that opens up at 8:20 a.m. So majority of you guys are gold traders. That's your exchange opening up at 8:20 a.m. Eastern. At 8:30, normally we have some North American red folders. We don't have anything tomorrow morning. We got some FOMC members speaking. It's not Powell, so it's Hammock. Yes, there is speakers, but they are not as important as Powell. So when Powell speaks, we listen. You see here, FOMC member Hammock speaks. It's a yellow folder. It's low impact. I don't think the markets are really concerned about Hammock speaking. The markets are more concerned about this gentleman right here. So tomorrow morning, please guys, circle this. But make a note of this. If you are trading right after 30 minutes of Wall Street market open at 9:30, 10 a.m., look who is speaking, who is testifying over here. You got your Fed chair, Powell, Mr. J. Powell. So he testifies. So he'll be in front answering questions, so just, again, he has the power to move the markets with whatever he is saying. So just pay attention, and that's 30 minutes right after Wall Street. There will be volatility here, and it will be volatile until it's over. So this could go for 15 minutes, 30 minutes, 45 minutes, 1 hour. But if you don't know what it is, you can look over here what it is. You can read up on it, exactly what is everything, how often does he testify, what is all this, what does this mean, who is this gentleman. All of these things are on here. Okay, so with any one of these folders, if you want to learn a little bit more as to what it is, click on one of these notes and they're open the detail, and then these folders will explain to you exactly what it is. Okay, and then after Powell, later afternoon, going into Power Hour, the last 30 minutes of the trading day, you have a few more members speaking. Okay, so Tuesday, all I would be really concerned about is right around here, right after Wall Street market open with Powell. Okay. And then Wednesday. So midweek Wednesday, it's kind of your midweek. Normally Sunday, Monday, Tuesday, markets have already maybe made a move, either bullish, bearish, or maybe in some consolidation. And then this could be maybe a midweek continuation of the trend. It could be a midweek consolidation. Maybe Monday, Tuesday, the market made a move, and then Wednesday is kind of cooling off to continue for Thursday, Friday. So just pay attention, if you haven't already, to your midweek, your Wednesday. We call it, your everyday, your hump day, when you're going to work and things like that. So the markets have, think about it as a hump day in the markets. Anything can happen on a Wednesday, and we do have lots of news. Okay, so just think a little bit more. Now we've got the 8:30 red folders. Okay, so coming into Europe, not much again going on in Europe. I would be focusing more on Wednesday right in here. Look at this block. You have the 8:30 block. Okay, so number one, you have 8:20 a.m. Eastern. You got COMEX market volume opening up. 10 minutes later, you have US, 3 folders, and they're pretty important folders. It's CPI data, so this is everything to do with inflation. So you got the day before Powell testifying. He might ask questions about maybe interest rates, about labor market, about inflation. He's going to talk about it, testify, and the next day actual numbers come out. And these are all our previous months. So right now we're in February. So this is all of the January's inflation numbers starting the new year of 2025. So number one, first folder that comes out is our core CPI month over month. You're seeing that they're forecasting a little bit of an increase from the previous month. Last month it was 0.2%. They're forecasting a 0.3%. That's a 0.1% increase. We'll see the actual number that is released here. It'll either be 0.3, then we know that it is along the forecast, but it's greater than the previous month. It might be less. Like what if this is 0.2%? Then what it is it's less than the forecast, but it's exactly the same as the previous month. So we'll see. And then the only thing here is pay attention to the word core, because the other one is the same exact folder, CPI month over month, but it doesn't include the word core. So these two, you have to distinguish between these two. Anyone know what core is? We've been talking about this every single time. I told you guys get familiar with what this means because you're going to see this more often than not. You're going to see this when we do PPI data. You're gonna get familiar with what core is. Okay, so core. Again, if you don't know what it is, real simple, click on the folder and it will explain to you exactly what it is. So what does this measure? It's a change in price of goods and services purchased by you and I, the consumers, but core is excluding food and energy, okay? So everything you and I purchase as consumers, excluding food and energy. Food and energy are like the majority of everything we spend our money on. I don't know about you guys, but I eat a lot. So majority of my money goes to food and energy, okay? I have to pay lots of money to keep my home warm in the winter months when it's minus 20 outside. It's freezing cold. I was outside for a quick smoke and I froze outside. So I got to pay lots of energy here to the utility companies to keep my house warm. And I like to eat food. But this first reading does not include food and energy, okay? So we understand that. And then right here, so why do traders care? Consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for the inflation containment mandate, okay? So, and then if you want to see the history of the last, what was the reading on January 15, December 11, November 13, October 10, September, and you can go all the way back to kind of back test to see what's going on. And then CPI month over month. So you guys can guess it's not core. So this one will include food and energy. You might want to be more concerned about this one. Okay, so we've got that CPI for Wednesday. And again, Fed Chair Powell testifies at 10 a.m. So make note of that. 2 days back to back, he is testifying. Okay. Then we have crude oil inventories. We're going to do crude charting, so that might affect the long-term analysis. So crude oil, we'll pay attention to this 10:30 a.m. when they release this. So just continuing to go through. I'm not going to spend too much time on all of this because this should be done on a regular basis. You guys should have this done. We go into Thursday. Then Europe starts to get a little bit busy. Lots of news coming out of Great Britain here. You got a lot of GBP news. You do have a high impact folder as well, the GDP month over month. And then we move into our North American session. Once we get through consumer report, then we move into producers. So that's what PPI is. This is producers. So very similar. You have your core PPI and then your regular PPI. Unemployment claims. These are weekly unemployment claims. They are important. They come out every single week, every Thursday morning at 8:30. They are week over week. And then finally, to finish off the week, Friday, we do have some U.S. core retail sales, and then trade careful on your Friday because Fridays can be tricky. Some Fridays are better than others, and some Fridays are very difficult to trade, are kind of trap days before the weekend, so just navigate carefully. Earnings this week. So this morning we already had McDonald's report in the after hours. Again, just go through it. If these are not names that you're too familiar with, don't get stressed out. Just go with the names that you're familiar with the big ones. Then we move into Tuesday morning pre-market. These are names I would be concerned about tomorrow morning. Shopify reports at 7 a.m. Coca-Cola reports at 6:55. BP, so this is oil and energy, over here at 5:05 pre-market. So you do have some bigger names, Coca-Cola, Shopify. You can trade these companies individually through buying shares of the company or through options. So those are some pretty big names tomorrow morning. Let's see who's reporting in the after hours. We got Supermicro, SMCI. They've been doing really well lately. If you have been looking at the SMCI ticker, these guys have been gaining a lot of traction the last few weeks, making some real good gains. So on Tuesday, tomorrow after hours, they report. They have earnings. DoorDash, just some names to list. And then we move into Wednesday before the open. Bear Gold. Okay, so you can trade gold companies, securities individually. You don't just have to trade XAUUSD. You can move into the markets and trade gold securities. And then Wednesday after hours, Robinhood. So this is a platform that some of you guys might be trading on or looking to trade on. They are also a publicly traded company. A lot of you guys are familiar with Reddit. They are a publicly traded company. They report. Who else do we have going into Thursday morning? John Deere. So more agriculture, farming over here. Crocs. Yeah, they are a company as well. Coinbase right over here. So Coinbase Thursday, if you're following crypto, Bitcoin, Coinbase, this platform, this exchange is reporting. DraftKings is reporting. Roku, Airbnb. So you do have some, not as big as the previous week with all of the tech, but you do have lots of earnings over here. And then Moderna, Enbridge Gas, Air Canada, and then finally, not much going on Friday after hours. Okay, so that's for earnings. Yahoo News, guys, you can get all of your news through here. US dollar adds to gains as Trump amps up rhetoric on trades. All of this. McDonald's had earnings. Here are some big names right now. This is that Baba I was talking about. Alibaba is trading at $112 per share, up 8% today. So a lot of names are in the green. Discord, guys, over here we send out signals and trade ideas. This was one on gold. Okay, so we're just showing you gold here. This pullback right into here, right into this demand box, right at 28.98, just below 2900. Perfect rejection and move all the way out, pull back into structure here and continue to take off. So that was a fantastic trade, guys. This was with a 0.1 from 2900 to 2920. That's 200 pips. Again, 28.98 to so you can see how a little trade, you don't have to go in with big trades. They can turn out to, if you follow the trend of the market and you're on the right side of it, you can really benefit from it. So congratulations to all of those that used this signal for gold in our group. Really well done. And over here, guys, this is our website. We have a free blog for all of you guys right over here. Everything, lots of information here for you guys to read up on, educate yourselves on. A lot of breakdowns. It's free. I highly recommend this for everybody. We'll be doing more and more and more on these blogs. And guys, education, we got tons of education for you guys to get started on your journey of trading, whether you're a beginner, advanced, or intermediate, whatever it is, we got you over here. And we have a free Telegram for everybody on YouTube. It's pinned at the top of the channel. And it's right over here. So we kind of showcase what we do here in our private Zoom room with Dave over here, and show you guys the trade setups before and after. This was the Scalper Pro session, guys, and we do have a promo going on right now, 50% off on 5 spots remaining for the premium membership on 3 months, guys. So if you want 50% off, you kind of get everything that we offer here. You're welcome to utilize it. And for the tax that is charged, we are adding a 10,000 Fixify account for you guys at $100 value. Okay, so just click on that if you're interested, and let's get into the charts. Do you guys have any questions before we get started? No? All good? Okay. So then let's get started with gold over here. Okay, so what I'm going to do is we're going to start off with the daily, and then we're going to bring it into the 4 hour. So just some immediate levels. this zone. This was the previous all-time high. Remember, we got up here, that previous all-time high, and what we did was we made this red and kind of stretched it into the future, and we physically had a body that closed above it on January 30th. So right before the end of the month and the new month of February. So you can see February's volume is real nice, strong, bullish volume, breaking out of this zone. So the volume is above us, and we'll keep it on demand. Okay, and what I do is I stretch it into the future. So if there's any other pullbacks that ever do come back down to here, if it ever does come back down red down into here, then possibly we will move our way. If it retests this, maybe it holds, and there is a lot of pending orders here that continue to drive gold up. However, if we do close below it, then if it pushes down and closes below, it might come back trade into this block, but it might be red for supplier offers, and then gold might start to sell off. Okay, we're nowhere near this block right now, but we still have to acknowledge it and mark it up on the charts. Yeah, Trev, gold is a rocket right now, so I wouldn't suggest trying to sell this thing as of yet, because if you are, you can literally look at how bullish this thing is. Okay, so we did close above here, it did pull back right into there, and we've been going up since then. Is there any other maybe zone right now, like with all of this? I would maybe consider this little zone right in here that was kind of formed, to maybe stretch this 2850 block across. And I would also pay attention to this block, because this one is below us and it's pending down there. But we also have, maybe if it retraces back down to here, maybe this will hold momentarily where it comes down and then bounces off of here before it comes all the way down to this lower green block. Okay, so there was a little bit of consolidation on this day right here, but it could just continue to move up. Okay, so just one other specific area I would put a daily point of interest is on this big bullish candle that started this week, Monday, today. So we kind of opened, it is like basically a technical bullish ignited candle that just had very little drawdown. I don't see a wick, very tiny wick. So today was strong, coming off the weekend with green volume. We filled our previous weekly high over here last Friday and Wednesday, and we continue to drive up to a high and close right near the high. So I would be looking at 50% of this candle, and it's positioned basically right at the last week's high. So I would place a yellow line here, or any type, or any line, like it doesn't, whatever you guys like. But what I would pay attention to is maybe a pullback and see what type of reaction we get at this yellow line. If it can't hold, then maybe it trickles down to this green block and we see what happens there. But this might be some ongoing support that is forming before we get to the block. Okay, so that yellow line is a daily pivot I would really pay attention to right there. Okay, if it does pull back like this, comes down, and it maybe bounces off of that yellow line. We're testing 50% of that volume this week, and maybe it does bounce up a little bit, but maybe it gets rejected, and then we come back down, and then if it can't hold, then we break down to this block. Okay, so we take it kind of level by level. Now we're in all-time high territory up here. Now it's price discovery. How high can gold go? Your guess is as good as mine. Maybe it goes to 3,000. Some of you guys are saying 3,500. Definitely, I agree with you. It could continue to drive bullish, but it could also pull back. Like here, it pulled back and then continued to drive. It pulled back here, continued to go. It pulled back here and continued to go. Are we going to pull back and continue to go? But then if it starts to get rejected, like if we have one top, then two tops, double top, triple tops, then we might be finding where that certain supply is. Right now, we don't really have an official top yet. So when it's price discovery, we kind of got to use psychological numbers up there and kind of figure out where we think it could possibly go. So we're trading at 29.29 right now. So my next logical yellow line would be 29.50, just to see if it can get up to 29.50 right there. We're not too far away from it, but that's a nice psychological number, 29.50. Maybe it does test that. I could also go up to 29.75 up there. That's that next quarter increment, 29.75, and place a yellow line there. And then 3,000. That's that big number. 1,000, 2,000, 3,000, 4,000, 5,000. Those are those big numbers. So that's where maybe I place a red box, like right around that 3,000, maybe $5 above to 3,005, and maybe $5 below to 29.95. And maybe make it red, and just pay attention up there. If it does come up there, that's where there could be some sellers or some type of supply in the market ready to maybe sell into this big run over here. Okay, so now what I would do is, overall, how does it look on the daily? Like, you can see the uptrend where it started from all the way down here back in December, mid-December, has started, and you can see how we're still basically, it's on a steep trend, and it's kind of diverging away from the trend line where it was kind of hugging the trend line here, and here. It was trading alongside the trend line, but recently, the last 2 weeks, we've been kind of diverging away from the trend line. So you can see it is starting to go a little bit kind of parabolic, and the degree of the trend, you can see if I was sticking with that trend line, you can see now how steep it's getting. It's getting like real steep right up there. Okay, so it still has potential to continue to drive, but it's very difficult to look to short this thing right now because there's no break of structure anywhere. It's still very bullish. Okay, so let's move on to the 4 hours now. Okay, this is what we're going to stick with, the 4 hours, and maybe start to look for maybe some swing trades. So I can see over here how it kind of consolidated on the 4 hours, green, red, green, red, green, red. Then it pushed down, but I don't see any red volume kind of closing below there. This was a 4-hour candle. Yes, it did make its way down there, but remember, it's a 4-hour candle. So if you're trading 4-hour candles, try and let them close and then trade accordingly, just like if it was a 5-minute or 1-minute candle. You have to make up your mind. Are you going to trade it on impulse, or are you going to wait for the entire candle to close to give you more confirmation? So yes, it did. It was very bearish there Thursday at 9 a.m. when Wall Street market opened, but then it continued to drive in and closed right in the green box, and then the buyers were waiting in there and continued to move it up. Couple pullbacks. Each successive low is a higher low. If you look at this wick, look at that wick, it's still, the 4 hours are making higher lows and continuing to push through here, fill that long wick and close above. Now I use that yellow line as that daily point of interest. We got 4-hour volume close above. We kind of consolidated and continued to move. They gapped it up and continued to drive right now. So I kind of want to put some Fibonacci lines on our 4-hour, but where do I want to start it? Maybe I want to start it on this leg that got started, like right over here, where we've got this bullish leg. We kind of consolidated right in here, and then we're continuing to drive up. So, you know, like an ABC pattern, here's A, this is that consolidation, and then we got that BC pattern driving through here. Are we going to consolidate and we're going to continue to go up, or are we going to pull back a little bit? So this is where I'm going to start to place a Fibonacci from, because this trend is not over yet. It's continuing to make higher highs. It pulled back, higher low, and we're continuing to drive for a new higher high. So I want to stick with this trend right now that's developed and put my Fibonacci below this to maybe help me understand where that 618 is, maybe where that 50% of this retracement is. But I'm going to start it on this candle right here. So when you add a Fibonacci, it's all subjective. Everyone has their own opinion. Some of you guys might be starting it on here. Some of you guys maybe are starting it down here. But the Fibonacci tool doesn't lie. It will give you the retracement, the possible retracement of wherever you place it. Some of you guys might be placing it going down, you know, if you think it's going to start selling. But I'm going to continue to go with this trend and place it from this 4-hour candle on Sunday, February 2nd at 2100, right at the bottom, swing low, and drive it up to the swing high, which is currently the top of today, that wick right there. I know I just placed it right at the high right now, and it can continue to break through here. But if it does, I could add a fib extension, or I could just follow my daily pivot level. So if it continues to break, that's why I have that yellow line at 29.50. If it continues to drive, I got 29.75, and then that's that big red zone at 3,000. So now, if we do get a 4-hour pullback, maybe it's going to pull back right into here. The white line signifies the 0.786 of this Fibonacci, of this retracement, and it's 28.98 and 50 cents. So we're just under that psychological 2,900. So if we do get a 4-hour pullback, maybe we could look to continue to buy. Maybe we can buy off of this white line. If it dips a little further, maybe at that daily point of interest, maybe we can look to take a buy position anywhere there. We're looking for a pullback, and then we buy the pullback to continue to take gold back up and higher. Okay, so we could be looking to buy pullbacks. However, we could also be looking to maybe sell below here. So if it moves up and pulls back, we got one leg coming up. If it pulls back, and then let's say it moves up, but then if it's a lower high and we continue to drop down and it closes below there, this is probably maybe an opportunity to look to sell gold and drop down to either the 618 or this 0.5. See how the 0.5 is right in our green box? So maybe it could come down there and then start to make its way back up. But for now, what I would be looking for is, do I want to buy the all-time high right up here? It's difficult to buy the all-time high. If you look at RSI, you can see that we are really overbought on the 4-hour. The RSI right now is at 80. Okay, so it's 70 is considered to be overbought, and now we're at 80. So this is an area where a lot of traders are selling. Okay, but you can see that if you're selling in that area currently, you're getting you're in drawdown because it's continuing to squeeze its way through there. So I would just use caution. Okay, so what I would be doing maybe this week is looking to maybe buy at this level. Okay, so what I'm going to do is I'm going to place an alert at this level. So if it gets down here, I'm going to look to get notified to maybe look for a buy on a pullback unless it closes below. So what I'm doing is I'm placing an alert right here at just under 2,900, 2,898. So you can basically say 2,900 or a couple bucks below it if it breaks, similar to this little break right there, and then it came back up. But this is an area that I will be monitoring for either a pullback buy or to see what just type of reaction we get down here. Okay, so what I'm looking for this week is a pullback for it to come back down in here and maybe look to buy out of here to take it back up to the high, or maybe to break out for a new higher high. Depending how I get in, then I will place stop loss accordingly. So if it's going to be you can see if you get in, like let's say it just comes down and bounces, you can see that that's a pretty tight stop loss. If you get in, it could come down a little bit more and stop you out, then go back up. So also positioning a stop loss, where would you like to place it? So I kind of look at structure, maybe right there is a really tight conservative stop loss. If you kind of want to open it up a little more, you're bringing it down to there. You're bringing it down just to the 618 or below. If you're looking for a bigger move, then maybe you want to bring it into that demand box. But when it gets there, when it's coming there, then we'll discuss about the stop loss and everything. Okay, but I'll be looking for some buys around here if I can catch a pullback. So with an arrow to show you what I'm kind of looking for is maybe a pullback to come in here, maybe one, maybe even a double bottom somewhere in here, and then see if it will drive back up to wherever the high is, and maybe if it can produce a new higher high. Okay, do we understand that, guys? Kind of what we're looking for. If you want to continue to buy, yeah, absolutely, you can continue to buy, but you just have to be very careful buying up here because it is extremely overbought on the higher time frames, and higher time frames hold more weight, so it's showing that it's still very bullish. Okay, so that's gold. What are you guys' thoughts on gold right now? Um, If you don't want these yellow lines, you can remove these yellow lines. Okay, I just use these for reference. You can use fib extensions as well to give you next levels above if you choose to. Aaron going to 3,000. Yeah, let's see if it does. Okay, so we'll monitor this all week. Okay, let's move on to crude oil, U.S. oil. It's pulled back a little bit. Okay, so we'll start off again on the daily. This is now crude oil. So we're switching securities here. We're looking at crude oil. So overall on the daily, if we look over here on October, it made a high just under $95 a barrel. Then we pushed down to about just under $69, but it's still a higher low from all over here. It continued to drive its way back up, but we didn't come back up to these highs. Okay, so you can see now the supply came in and shorted oil at just under $87, $88 a barrel and continued to push down. Again, where we got a higher low, come back up, but it couldn't take out this $87, $88 level. So we have a new lower high just at $84, $85. And it continued to push down, break our structure and drop, take out these lows right under here, right under 67, and bottomed out at 65 and continued to drive back up. But again, a lower high. So sellers are kind of in control, pushing it down. But you can see now we've got a lot of support being built on the daily. When it breaks $65, $66, when it comes down there, it goes back up. It came down again, $66 and went back up. It came down a third time, $66, 67, went back up. Came down a fourth time, again, 66, 60 in here, multiple times. So when I see multiple times, this is where I start to draw a green box. And then I stretch it into the future. Okay, will crude ever come back down here? Possibly, and if it does, maybe there will be buyers again waiting in here to buy. So that would be a daily demand zone. You can clearly see how it looks since September, October, November, December, January, February. Now it pulled back and we're creating a higher low support right now at $70.50. So there's a little bit of demand that's being built right over here. Okay, it was resistance right there with all of those wicks. This green body candle right here on December 30th closed above and caused this upward trend that took out this previous high right here. So if I continue with this, it came right into there and then bounced right out on Friday, and the start of this week we got it Monday. We got a nice bullish candle coming out here. So I would continue with this green box in the future, around $70, just under there, to see if we'll continue to hold. What if we retrace back down? Maybe then we get a double bottom at this green block. So I can see already it's made its way down, this big leg coming down, and then we kind of just bounced right back out this today and last Friday. So we're battling against all of this resistance, this downtrend. So yeah, it could just be a bounce. Maybe sellers will step back in and push it right back down. And then this is where maybe a second bottom will form. If it comes back down in here, we watch it and see, is it creating that double bottom? Then maybe you get that W pattern. We figure out where the resistance is, and is it either going to break the resistance, pull back to resistance, now turning to support, hold, and then we drive. And then we continue to take out all of this resistance to our left and see how far we can possibly make it retrace our way back up. However, it could just be a false break. It breaks and the sellers push it back down and then we close below here. The same zone we keep, I would keep the same zone. I just change the color to red, and then buyers might be buying into now supply, and then big seller drops it all the way back down to $66 a barrel, and then maybe the big buyers are loading in there to take it back up. So does this pattern look familiar, guys? You got to pay attention to where resistance is. Is it a head fake out of there? Is it a fake out, or is it a legitimate move? And then the retest right there holds, then it could turn bullish. But the retest is where you kind of figure out, will it be buyers or sellers? Okay, so if we continue with this theme, now what we got to do is figure out where there is some resistance, like, or some supply in the market. Okay, absolutely, we can say up here $80 is supply, because we can clearly see in the past how the volume reacted at this level. Right there, for multiple days it was red. And then if we stretch it across, we see that we did have a formal breakout, but then it got rejected. So there's like a head and shoulder pattern. There's your left shoulder. The breakout is your head. And then it came back in and tested now the right shoulder, this block. And again, they pushed it down. There was a little point of interest right here that broke and dropped. So if I continue with this red box going into the future, you see how it traded right into it naturally, January 15, mid-month, and then they rejected it right back down. So that's a clear visible block in the market that what I do is stretch it into the future. Are we ever going to come back up green, green, green and trade back in here? Maybe at some point, but right now you can see how it's still acting as some supply. Is there another level that I can see? Yeah, I can see right here. So this is going to be where maybe we might see crude trading this week. What about over here? See over here where it got rejected, right? Green, it came in there and then pushed it back down. We came back green in there and then they pushed it back down. This bar closed above. So what I would have done is, as soon as that bar closed above that zone, I would have made green and stretch this zone into the future. And then now, when it did come back down red, 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 I would be looking to see if the buyers are present here to take it back up, and they weren't. See how the red candle closed below the zone? Then if you flipped it, again, if you wait for the bars to close, you'll gain more valuable information, as opposed to just reacting on impulse. Okay, so 4-hour candles take 4 hours to close. So you have lots of time to analyze. Either if you're a daily trader or 4-hour trader, you got to make up your mind. Are you waiting for an entire daily candle to close? But you're looking for a bigger trade. You're looking for multiple days, maybe weeks to swing a position. You're not looking to scalp these things. So I can see how it closed red. Then it came in green. Again, lower high, they pushed it down. Came in green. Again, lower high, they pushed it down. And we continued to kind of consolidate. And then they pushed it down. So are the buyers of oil going to be able to push it right back up to maybe just under $75 a barrel this week? That's why I believe it was Tuesday or Wednesday morning, the crude oil inventories coming up this week are going to be very critical as to where oil could be moving this week. Okay, so those are my daily levels. Okay, but remember, we're going to bring it down to the 4-hour and maybe look where we can possibly place like a Fibonacci. So what is the overall trend so far? What we can see, I can see that there's a considerable downtrend pushing down. Okay, like right in there, how it was up here, continued to push down, break of structure here. Again, the buyers tried up there, but then they got rejected and pushed them down. They are slowly bringing it right back up, but they might be coming back up and then they get pushed back down again. So we got to watch where these 4-hour bars close relative to some points of interest. Okay, so is there a 4-hour like kind of point of interest? What I would be watching, absolutely there is. I would be focusing, I'm going to place a yellow line to show you guys what I'm kind of looking at. I'm looking at right over here. See where it kind of retraced back down, held the yellow line. These are 4-hour bars, mind you, and then it came back up and we pushed back up to that bigger, larger red supply zone, and then it pushed right back down where relative right close to this yellow line. Okay, $73, and then we pushed right back up. Again, when it retraced all the way back down, look at where it kind of bottomed out, just below that yellow line, and it came back up. Now we get it, still that trend pushing down, making those lower lows, but you can see that the buyers are stepping in like right around or below this yellow line, but there's a lot of selling pressure that keeps pushing and breaking lower and lower. So you can see now this yellow line is 4-hour resistance, and I can show you in the past over here, Monday, February 3rd, where it came green, 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 and then they rejected it above that yellow line and pushed it back down. Again, this candle right here, February 4th, 9. One second, guys. Better? Can you guys at least hear me now? Audio is good? Okay, thank you guys. Yeah, it happens from time to time. I apologize, but yeah, it's the Mickey Mouse voice. I have altered voices. If you guys want, I can talk like that. But what I was saying is, do you guys see the multiple rejections here again? Okay, so pay attention to this. Sorry guys if I cut off, but this is an important point I just want to make right here. See when it came up bullish, bullish, bullish. Okay, remember you gotta wait for the 4-hour candle to close, because then you're going to get concrete information as opposed to just buying on impulse. Okay, so if you had waited for the 4 hours to close, you saw it was bullish, but then it got rejected back down. Again, this candle was bullish, but then they rejected it, and pay attention to how high the wick is. You can see it's a lower high, lower high. Technically, the sellers are pushing it down lower. Okay, I know it might be just by one tick or 1 point or 10 pips, but technically speaking, it's being lowered. Okay, so you got to kind of think about that. They are pushing the depth of market down, and it closed again below that yellow line. Look again, this candle. These are 4-hour candle, guys. These are not 5-minute candles. So look at the tight range it traded in. Again, it made its way up there, but look, again, it got rejected, and it's a lower high, lower high. Volume closed below this area again, okay? And then you see the big sellers step in and push it all the way back down to the green box. We had some bullish momentum, but then it's trading kind of like right into 50% of this red candle. And again, they pushed it down, where they aggressively pushed it down right down here, where it bottomed out into our daily demand. And you see right now we're coming out of here now. Okay, so but we still need to test this yellow line. Again, this week we got to be watching this. Is it going to break again, just like it did 1 time, 2 times, 3 times, 4 times? Will it be a 5th break up there? Again, wait for the bar to close. It might break again, make a lower high and get rejected and close back down, and then again they drop it. Okay, that's that fake breakouts over here. You might see that again. However, we might see our first green 4-hour candle that physically closes green above here. I haven't seen a green 4-hour candle close above this yellow line since this one right here, Friday, January 31st. So it's been almost 2 weeks since we've closed with 4-hour volume above 70 to 80, around $73 a barrel. Okay, so what happens if we get a confirmed close above this yellow line? So if we get that 4-hour volume that breaks, but it closes, then guess what? This yellow line, or like zone around here, might be turned into an area of support or demand, and more buyers want to buy in here because now it's verified, now it's confirmed. So we look for a pullback, and maybe we buy the pullback to continue to take out these previous high wicks, and then we trade into this big red candle, maybe making our way up to that big daily supply box. Okay, so you guys understand what I'm saying? Why we really have to pay attention to this yellow line. So this yellow line is where I create a 4-hour alert on my chart. Okay, if you guys want to do this as well, you're more than welcome. But this area, I'm not just creating alert, but I'm creating like an area of reference that I want to watch. So if that 4-hour volume gets up there, that doesn't mean I'm just automatically going to hit the buy button or the sell button and just go in blind. I'm going to now pay attention to see how the volume closes above here. What is also what you can do is when you get it tapped in here, you can also go down to a lower time frame if you like. You can go down to the 2 hour and watch how the 2 hour bar closes. You can go down to the 60-minute candle and watch how the 60-minute candle closes. And maybe you can take a trade off based off of that. But if you're strictly sticking with the 4 hour candles, then strictly stay with the 4 hour candles. Because if you start going down to a lower time frame, you have to know exactly what you're looking for, okay? Because you could get faked out on those lower time frames. Okay, so now if we're going to create a Fibonacci, like stick with the theme, we're going to, what I would do is maybe place a Fibonacci from the high to the low to see now how high we can retrace back up because we're battling resistance, right? So I grab my Fibonacci tool, I place it on the highest point up there, that green candle on Wednesday, January 15 at 1 p.m. Eastern. I place the top of my Fibonacci and I drag it all the way down to the lowest point, the bottom of that green box. Okay, so that's the retrace. And now I can see the 4 hour volume is approaching our white line on Fibonacci, our 0.786, $72.65. It is just right below our 4 hour point of interest, that yellow line. So you can see how we have now multiple confluences. So now we've kind of created ourselves our little zone right in here. So what we can look for is if a green candle can physically close above the yellow or the white line is what we're looking for, and then a pullback right into there. Maybe we can buy out of there and continue to take it back up. However, it could act as also supply up here. This could be a zone where it gets rejected and then they push it back down. So what we have to also watch for is, does it come and trade in here and then they push it back down and come back in and then it's a double top and then all of a sudden it's selling back down. Okay, so all I'm looking for is an entry point or an alert, like a signal. As soon as the volume gets here, again, I'm not taking a trade blind, but I'm going to watch what's going on, okay? So if you want to kind of draw a zone, you're more than happy to, okay? You can utilize your yellow line and your Fibonacci and just draw your zone like that. And it's still representing red because we have not closed above the zone. Does that make sense, guys? How I just placed a zone in between that yellow daily point of interest and my Fibonacci 786. So I'm utilizing my indicator and my tools to create a zone for me, okay? So now you can visually see how we've been rejected, pulled back down, but we came back up. And one more yellow line that I would place as a 4 hour reference is right here, because I can see where they closed it. That spin top was right at that yellow line. That bearish candle opened there. I can kind of see where it came up green, green, green. Look at what it tapped into, 2 times that yellow line, and now we're above that yellow line. So if it pulls back red and holds here, again, we might be buying off of this yellow line and buy the pullback to continue to drive up. Okay, so I'll place an alert on this yellow line as well, giving myself multiple alerts this week for positions to take on crude oil. Okay, so do you guys understand? And then if we continue to break, let's say we go bullish. Okay, for example, if we continue to break above here and we close above, we retest this zone, we make it green, could possibly get a buy entry, and then we push back up, fight through all this resistance, and we get there. Look at where we're coming up to. Then we're trading right up to the 618. And maybe it breaks out just a little bit, but we're trading right into the big red box. So then that's where, if we take a trade like that, and we're making our way up there, you know, this is where you got to do some trade management. So like, for example, if you take a buy and it moves all the way up there, you're could be up maybe 150, 180, maybe 200 pips up there. Then what I would do is start a scale out approach, risk management. Either take your stop loss and go to break even. Reduce your capital, your risk in the trade. If it's moving up 100, 200 pips in profit, trail it with maybe 100 pip trailing stop loss where you've secured 100 pips in profit, and hopefully it continues to drive through here and make new higher highs and make this a new support area and continue to drive. But if it pulls back, at least you secure a little bit of profit, and then you look for another potential trade at one of these areas. Okay. Unless you are looking to swing this for a multiple week. Okay, so you've got to make up your mind what you're looking for. I'm just kind of setting up the zones here, but maybe crude is going to start to reverse and start to make a big move. Okay. Any questions on that? Okay. So we're going to use this as a reference area, potentially look for buys above. If we do get the confirmations, okay, number one, we need to see a green candle close above here on the 4-hour, maybe pull back, and then we buy it. Okay, we could also sell below here and push it down. Okay, so but we'll see. It's got good daily demand. 4 hours, maybe we look on RSI, have maybe kind of bottomed out there. We're trading above the 50. We're in bullish, we're in strength territory, but we have to break through this block. Okay, we are still moderately strong, still below 60 on the RSI. They could bring this all the way right back down to the 50 and test this psychological level. Then therefore we're going to fail to break here, and then they drop it back down. Then I see right here. Then here, is it going to pick up some buyers here at this yellow line, and then we make our way back up one more time, stronger with more volume to look to see if we can break through there. Okay. Otherwise, it could still be trending down. Okay, and it could still potentially come back down. Okay, so we need confirmations above there. That's oil, guys. Do you have any questions on oil? And remember, we have crude oil inventories. Let me just double check the date. I think was it Wednesday? Yeah, Wednesday. Wednesday at 10:30 midweek, we have crude oil inventories. Okay, so that could bring some volume, much needed volume, to move crude oil in bullish direction, or might continue to sell off a little bit. Okay, so that's crude. We'll monitor that all week. Let's move into NASDAQ. Okay, I know a lot of you guys trade NASDAQ every single day. So now we're moving away from commodities, gold and oil. Now we're moving into US index. We could be doing NASDAQ. We'll look at US 30. Maybe tomorrow we'll add S&P 500 on our list, and we continue, and maybe we'll add a Forex pair tomorrow, because we're not going to continue to do top downs on these charts. The charts will be there. What we'll be doing is analyzing the 4-hour volume, how it trades at these levels, maybe potential setups that we've taken and explaining them, and then we'll add multiple charts this week. So then maybe tomorrow we'll add S&P and we'll add a Forex pair like GBP USD, because there's going to be some British news later on this week. Okay, everybody follow so far? Is everybody doing okay? If you guys can like the stream on YouTube, we do appreciate it. It helps the channel. It helps us at SST. To make our time worthwhile doing this, so we do appreciate it, guys. Trev, how come when it dropped to the low, no wicks was showing, then it pushed up? On crude, Trev, are we talking about right over here, where it created this bullish candle? If you let me know if that's exactly what you're talking about. If you're still here, Trev. Okay, maybe if you... if it is this one that you're talking about, because it traded right into the bottom of that daily demand. So maybe that's why that bullish ignited candle formed in there and continued to drive up, pulled back, higher low, continued to drive. We broke through the resistance. Yeah, that's what you're talking about. Okay, that's what I thought you were talking about. Because remember this big daily demand zone, okay? So it didn't break. It closed right there, and then you see the gap down. Okay, if you see how kind of you get the clues of the candles. Okay, so what I do is, Trev and everybody, is I zoom in. Okay, I do it on the 1-minute candles. I do it on the 5-minute candles. I do it on the 15-minute candle. I do it on the hour. I do it on the 4-hour. I do it on daily. I do it on a weekly. I do it on a monthly. Just zoom in, and then you might get your question answered. So you see on this 4-hour candle how it broke the low and it came back up and it closed right there. Okay, but then look at where it closed. Like, it closed at $70.48. This 4-hour candle technically should have opened right beside it at $70.48. We should have had an opening price right there, and either it would go up green or it would open and it's red and would come down. You can see how they gapped it down. Okay, so that is a big clue in the market where they kind of gapped it down, manipulated its way down there, and you can see how tiny the wick is. So it just took a brief low, and then that's it. And then it came back up green, green, green to the opening price where this closed, where it should have opened. So then what that is telling me is they how can I say this? They manipulated the way down there to pick up that liquidity down there. Okay, I know. Let me know, guys, if that made sense the way how I explained it. But you see that body of volume right there. I'll make it neutral. Okay, you see what my eyes are seeing, guys? The way how I explain that, the closing price of that 4-hour candle. Pay attention to this, guys. This is important stuff. It doesn't matter what style trader you are or what time frame you trade. This is picking up clues on candlesticks. Okay, so even if you're an investor, maybe you want to pick up on a monthly pickup. Maybe you want to pick up on a candle on a monthly that's grabbing liquidity and could start a huge move in the markets. So, and if you're a 1-minute trader, pay attention to this because you're going to learn a lot about this. So then ask yourself, why did this candle not open right there? And then trade natural. Either it would have gone up or it would have opened there and naturally it would have gone down. Why? Because there is market makers in the market that can open and close wherever they want, wherever they see fit. Okay, so maybe they didn't want to break structure on a higher time frame. Remember, this is a big daily demand zone, and they probably didn't want to scare daily buyers out of the market. So think about that. If they really broke this, they probably would have spooked or scared daily buyers, which maybe that wasn't their intention. Their intention was just to come down briefly, grab a little bit more volume, grab some more liquidity. They didn't need to, but again, if the money is down there and they want to come down there, why not? Like they have the ability to come down there. If they see that there is some money down here, they don't need to open it up right there and drive. If there's a little bit of liquidity down there, you know, the more liquidity they have, the more volume they have, the further they can make the move. Okay, so there is liquidity. They did grab it right there, but you see how this was the start of the first kind of higher low and the big bullish candle that came through. So number one, it's a clue candle. I know a lot of traders don't zoom into the candles. I unfortunately do, but this is where I learned how to play the game with them. So they dipped it down, very small wick. So basically, and then it came right back up. Then it came to the point of interest. So normally, this is my style, guys. I have a yellow line right there. That's where that 4-hour body closed, and then I watch when the volume gets back up to this yellow line. I can even take this further and dissect this for you guys even further by taking this down. We highlight this area, we go down to the hourly, we go down to the 30-minute, we go down to the 15-minute, we go down to the 5-minute, we can even go down to the 1-minute and verify exactly what time and day at the time of the day what they did here. So the beauty about reading candlesticks is evidence is left behind. The clues are all there. It's just you got to go back and do your research. You got to go do the homework. When everyone gets in the market, all they want to do is just trade live, and then they fail to know what's going on. But the more knowledge that you have, trading will just naturally become easier and easier and easier. And that's why Dave and I at SST, we highly stress going back, journaling your trades, back testing your trades. Maybe at this time you took a sell, you got sucked in. When it came down there, you sold, and then you got stopped out. And then you're wondering, why did I get stopped out? And you lost money. But you got to go back and you got to learn from it, okay? And then once you learn from it, then you'll understand why you got stopped out and how to avoid making those mistakes in the future, okay? So I can see that it came up. And not only did it come up strong, they gapped it down. It completely engulfed that 4-hour red volume. It's kind of like Pac-Man, kind of ate it and had a lot of green volume. It closed right up to the high. Okay, so first thing I do is I identify where's 50% of that big green body would have been like right around here, and then I drive it, and then you see, guys, why I do this. Okay, I didn't do this on this trade, but I do this on every trade I do take. Okay, so right there, you see 50%. Give or take. I smoked a little bit of weed, but there's 50%. And then you can see this red bar, 4-hour candle, red, 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 red. And look at what it tapped right into. 50%, that yellow line. And what happened? That's where the buyers were waiting. And then they drove it back up, and that's where we started that next bullish run. Okay, so pay attention to the size of the candles and those 50% zones. Okay, and you guys know how to do it with a Fibonacci to figure out the zone. Very, very simple. Would you guys like me to do that and show you guys how I do it? If you don't have time to eyeball it, you should be doing it with your Fibonacci tool. Okay, most of you guys are not scalping 1-minute candles. If you're watching a 4-hour candle, you have all day to do this. Okay, so just grab your Fibonacci tool from the opening price of that 4-hour big green candle, bring it up. Bring it up, bring it up, bring it up, bring it up to the closing price of that candle. See how I'm just doing that? And there, okay? So let the Fibonacci tool do the rest for you, okay? Let it do the rest. You don't need to do anything. That's it. You've done your job. Now, there is the exact 0.5. Remember, Ron smoked a little bit of weed, so I was off by just a little bit. But if I now verify exactly, now there's no ifs, ands, or buts. We've placed our yellow line at exactly 50% of that entire candle. So now when I look back, I'm actually like back testing right now. I can see what they did. It came red, red, red. It touched exactly 50%, but it just went a little tiny bit lower and then came back up. Not all the time is it going to be exact. Sometimes it is. You'd be pretty surprised. Those are your sniper entries. Those are your snipes with minimal to zero drawdown, and you're right in profit because you're buying at the exact location. You're buying where the big buyers are. You're buying where the institutions are buying. You're buying where the banks are buying. You're not buying where retail is buying. Retail is buying up here. Retail is buying the high of this candle. Okay, the more smart money, it's waiting for the pullbacks because they're patiently waiting for a pullback. Just like I said, instead of buying gold at the all-time high right now, why don't we wait for it to pull back at that location? So similar here. Now, if you need to draw a zone, one standard deviation above, real simple with Fibonacci, it's your next level. So in this particular situation, it's your 618, and go one standard deviation below the 0.5. And then you get your Fibonacci 382. So now we've also identified the golden zone right there. See what I just did there? Just from the 0.5, I use that as reference. Go one standard deviation above your next Fibonacci level. It's already mathematically done for you. You don't have to do anything. And then go one level below. It's mathematically. And then just do this. This is the only thing that Fibonacci doesn't do for you. It doesn't take too much effort to stretch it into the future. That's it. And then what I do is, if the volume is green above, I make the zone green. If the volume is below red, I make the zone red. Very, very easy. Now you can see how it traded right into that zone and how it rejected back out of there and started. Sorry, this is taking forever, guys, but this is education. What are we going to do? And then started. So, Noor, you're on the call. Thank you for joining, Noor. I appreciate you. Noor's picking this up perfectly, and she's killing NASDAQ. Remember what I always say. The first bottom, it's okay. Okay, that was our initial buyers. But the second bottom, it might be producing the bigger leg. So you can see here how it came down. We produced our first bottom. That Trev, this was your question, bro. So that's why I'm spending a little bit of time on this. So I hope you're really getting this and everybody else is getting this. So that was the first leg, and it was a clue candle that gave us that dip down candle that came back up. But you see how we're trading right into that big red body candle. I do the same shit with this one. I would have grabbed my Fibonacci tool from the high to the close, figured exactly where's 50% of this big body candle. It's much larger than all of these 4-hour candles. You can visually see the size of it, and then we traded probably right into the golden zone of that candle. Do you guys want me to show you guys? I haven't tested this, but let's do it right now just to verify if Ron's strategy works or he's just full of shit here. Let's do it. Let's grab our Fibonacci. Okay, first of all, I smoke a lot of weed. Okay, so I just look for 50%. Sometimes I don't have the luxury of using a Fibonacci tool when I'm scalping 30 seconds, 1 minute candles. I would love to, but for 4 hours, you guys got all day to do this. There's no excuse. You're at work, you can come home from work and do some analysis, set some alerts. There's no excuses. We got traders in our group who work, who got families, and they're still killing the swing trades because they're putting in the work for 1 hour. You don't need to do an entire week's worth of analysis. Just real quick, pick a couple securities you enjoy trading and focus on these zones and set alerts. Okay, so I smoke, but there's the opening price, there's the closing. I'm guessing, look, I'm squinting. That's maybe 50%. Again, I might be off by a little bit. Let me grab my Fibonacci tool to verify this. Okay, opening price, bring it down to the closing price. Okay, so all I did was the opening price, green line, bring it all the way, it's a bearish candle, to the closing price. Now it plots, sorry guys, maybe the other one is confusing you. One second, let me just clean up here. It could be getting a little confusing here. Okay, so we're focusing on this red candle, Fibonacci. Okay, so there we go. There's my 0.5. I placed the yellow line where I was thinking it would be. Again, I was off by a tiny bit. So what I do is bring the yellow line down to 0.5. Okay, so I got the yellow line right at 0.5. Again, if now I want to figure out the zone, similar thing we did with the bullish candle below, we're going to do the same thing. We know where the 0.5 is. It's right there. We go 1 deviation above, 1 deviation below. There now we've identified our zone. Okay, again, it's red, so I make my zone red and bring it into the future, and then there you go. You can see how it came in green, green, green. It had an impulse break above that zone. It got rejected and closed right in the zone. And then the next candle opened. Again, it came back up, but look at it. Now we're talking equal highs. Okay, there's so much that we can learn from this. There's now equal highs, tweezer top highs right there. I place that to show you. See how they're very equal? Exactly around $71.29. It came up, they pushed it back down. It came up the exact same spot and they pushed it down red. We closed back in that zone. The next candle here now came up green, green, green. It broke the high just a little bit. So if you got sucked in and bought that green candle just as it was breaking, look at what you did. You were part of that liquidity that got faked out in the market and then they slammed you back down. Where it came down into this big green zone that we identified down there. And then this is what's triggered the run. And then now, pay attention guys, because we're learning a lot here on tonight's call. I didn't expect we were going to go through this, but everything happens here. Look at the green candle. Now it closed above with conviction, with volume. And then look at the retest now. So if you say, Ron, I didn't get in there. Well, I said, well, what? Did you not look at the retest of the yellow line? Look at where it came down red, red, red to the yellow line. So this yellow line, those tweezer top highs, were resistance, fake out, and then it turned to support and support. So you see how it came down? Run right back up. It came down. If you didn't get in here, the next 4-hour candle allowed you to get back in patiently again. And then this is the start of the big run that broke through. This is the second leg that broke through that resistance and continued to drive. Okay, so that's a lot of pips. Okay, from $70 to 75, that's 500 pips. That would be a really nice swing trade. You could be done trading for the entire week. Okay, but do this on your favorite securities. Okay, so sorry, forgive me. I'm going to get rid of the Fibonacci's. Get rid of this. I'm just going to clean up a little bit. We'll clean up our charts. Did that answer that? Hopefully that answered a lot of questions here. So you see now why I'm looking at this red zone. It might be this leg coming up is very powerful, but again, it might get rejected here. See those wicks? 1 wick, 2 wicks, 3 wicks, 4 wicks. That's why I said to you guys, I'm waiting for a 4-hour candle to see what will happen. Will it cut through here? Will it break and get rejected and come back and close below there? Then I'll be looking to maybe short that. I could look to possibly short that trade right there. Then I go into a sell. And then I'm selling off of this red block and I'm bringing it back down. Where would I go down to? Maybe I see what happens at this yellow line, because there used to be resistance and now it maybe turned into support now. If the sellers are strong enough, maybe they break it, maybe they drop it down to that yellow line. Maybe it comes back down into the green box, and then I can't be thinking, oh, I want more, I got to get greedy, maybe, because I know it's coming down to a daily demand, and I have to respect the daily demand buyers there because they were there. That's what caused that huge leg coming right back up. Why would they not be there again? So, unless the 4-hour candle can cut through here and close below there, that might be a different story. But it might just come through here and then go right back up. So that's why I can either buy above here or I can either sell below here. But I use this block for my information. Does that make sense, guys? Because it still might continue to trend down. Like, believe it or not, this right now, what's happening, I know it looks very strong, but we're coming up green. But look behind us. We got lower highs, lower highs, lower highs, and lower highs. It might just come back up here, and then they push it right back down. And then maybe we get a huge double bottom down there on the daily, and then oil is the big buy for the week. Okay? So again, I allow the volume to come to me naturally, and then I figure out the move when it gets there. It alerts me, then I pay attention to the particular time frame I'm trading and watch to see if volume will close above or below to continue to buy or to sell. If you're going to take an impulse trade, I get this question a million times. Well, Ron, what if I take an impulse? Well, you're kind of answering your own question. If you're going to take an impulse, or you're speculating, there's no confirmation where that candle is going to close until it closes. So if you go in a little early on any time frame, this is a question I get all the time. Ron, I'm trading 1-minute candles, 5-minute, 15, 30, 1 hour, 4 hour, daily. This question is universal. It's universal from every trader, and the answer is universal. It's the same answer that whether you're a 1-minute scalper or you're a 4-hour trader. If you're going in before the candle closes, you are speculating. So you have to understand that you could get rejected and then you're in drawdown. So do you want to go in on a speculative trade with your normal position sizing and risk go high? That's a high risk trade. So lower your risk to the bare minimum. Go in with a small trade. Like if I was looking to buy one of these 4-hour breakouts, where before the candle closed, maybe I would go in with the smallest size possible, just because I'm just speculating to see how high it will go. If it comes back, I watch where it closes. If it closes above, then maybe I'll go in with my normal trade. But however, if I go in before it closes and then it rejects me and comes all the way down, I can close that trade. I've speculated, I've seen what I needed to see, but I'm not risking my entire week's profit. I'm not risking my entire portfolio on a speculative trade. Then I get my answer from the market. I tried with a small trade. It got rejected. I'm in drawdown, but then I can close it and not get revenge trade, not get pissed off, not get mad at the markets. I can just close it. I got my answer. I was speculating. I entered the trade on impulse. So the market slapped me and gave me a lesson. But it's a lesson that I don't lose too much money. And then it doesn't really affect my psychology. I learn from it and it doesn't really destroy my accounts. Like most traders blow up their accounts and then they revenge trade. And then before you know it, it's the same shit we go through every single day. Okay? So be smart with your entries. Understand what is going on. And the easiest way to explain this is don't enter a trade until the candle officially closes. Do you guys know what I mean by that? It's not that difficult unless you want to make it difficult for yourself. And also I want to state that even if you wait for a candle body to close, there's no guarantee that you're going to hit the next trade is going to be profitable. I want to make that clear. Okay, so even if this does break above here and we get a 4-hour candle that does close, that doesn't mean that it's going to come back down and retest this and we're going to buy and then everyone's singing and we're all dancing here and we're making money. it could just come up here, close, come back down here, and then push back down and close below. Then it gives us information. It did make its way up here. It did close above, but then the next 4-hour candle came back down red and brought us all the way back down. Okay, and then it could continue with that motion going down. Okay, so it's just use caution, be smart, be patient, and be disciplined. If we can do all of those things with proper risk management, I'm telling you, you can do really well in these markets on a daily basis. Luke, so what I'm saying is always wait for a candle closure. I didn't say always. I said if you can, if you're disciplined enough, 100% wait for it to close. But I also gave an option if you can't, if you're kind of itching and you got ants in your pants and you got to go in, I gave you kind of a blueprint of how to go in on the smallest speculative trade so that if it goes against you and you get faked out, it's an easy close and we move on. That's what I'm trying to say. If there was one way of trading and everybody was profitable, I would tell you guys. But this is where we have to be smart. It took me years and years and years to learn this. So I'm trying to save you guys a lot of time and finance. I'm trying to save you guys a lot of money. Learn from my mistakes, guys. Believe me. Okay, so that's U.S. oil. Good analysis on U.S. oil. Okay, sorry, we were on NASDAQ. Okay, we were on NASDAQ. Oh my god. Okay, so we gotta speed it up, guys, because it's almost 9:30. We gotta finish this, wrap this up. So we're gonna do NASDAQ and US 30 now. Okay, so let's shift focus a little bit right now. We're gonna move from gold. We're going to move from oil. Now we're moving into US index. Some of you guys are aware, last few weeks, tech had big earnings. Some big names have had their earnings. How did the market respond to that? What is going on? Is NASDAQ bearish on the daily? I don't think so. I think I can clearly see it's bullish. Like if you start from this leg over here, this pullback, it broke through that resistance. We made a new higher high. And then it pulled back right there, and it would continue a new higher high. It pulled back, still didn't break this low, came back up, and then higher, and continued to break this resistance, new all-time high, pull back again, a new all-time high we hit up there, and now it's most recently pulling back again, but it could be driving back up to take out all of this resistance and try for a new all-time high. We might see that this week. It's consolidating in here. It's ranging. There's enough range to be day trading in there, but more traders are looking. Is it going to create a new all-time high? Is it going to come back up here and maybe take out a little bit of liquidity, get rejected, and come back down, and then it starts the sell-off in the market? Time will tell. Okay, but right now we have to really acknowledge that it is still bullish. Okay, so we do have some zones of interest which I would be looking at. Number one, what I'm looking at is this previous all-time high right over here. Okay, and then if you stretch it, you can see how it traded right into it, back down, traded into it, back down. This was the first bar that closed above it. So naturally, what I would have done with this zone is made it green and continued with the theme of stretching it into the future. Yeah, I see that minor break. It came back up, but you see those wicks came down, closed again, came back down, closed in it, came back down, closed in it, and then there's your second bounce, and then there's your move back up to the new all-time high. So I know trading in here was very difficult. Some traders got caught up there. They opened big short positions and got liquidated because it just wasn't the time. We didn't get any more red volume closing following those wicks. So again with this zone, don't stop. Why stop? When you figure out a zone, right there, keep stretching it. See where it basically almost came in there and went back up. Here it actually physically did come again right into that green box. Trade right out of it, got rejected. Again, it came in there. I don't see any red volume closing in there or below there. So continue to stretch it. Here we had the market when it opened early Sunday night, Monday, and it came right down there. They gapped it all the way down and pushed it down again right into that green box. So what I'm seeing is this is a daily demand zone for NASDAQ. Every time it comes in there, there is buyers that are pushing it right back up and taking it back up. So again, let's now do the theme now. Stretch it into the future now. Now we can actually use this and backtest this. So if NASDAQ ever does come back down in here, maybe we'll see it get rejected out of here again. Maybe we see it get rejected. Maybe we see it the second time and then really has that launch pad. But however, we also have to understand that if it doesn't hold this green zone anymore and we get red volume closing below, this could be the start of the market shift to go reverse and go sell off for a little while. Okay, so this is kind of what we really have to focus on, is to see if this holds. If we get a red candle come all the way through, similar to this one, and close below, I'm not changing that zone. I'm not changing the size of it. All I'm going to do is change the color of it to watch how the buyers come back in here. And then this might officially be an offering zone, and more offers creates resistance, creates supply in the market. And maybe they buy into it. Maybe they get pushed down. Maybe they try buying into it and then they get pushed down again. And then there's your break and then your drop. Okay. So this zone, I'm going to pay particular attention to this. Whether the volume gets down here or not, I'm going to pay attention to this. Okay, we're nowhere near this box right now, so we don't really have to talk about this right now. But it's good to know your zones. Okay, I can see how this is kind of like back testing and now bringing it into the future. Can we see another zone above us? Absolutely, we can. We can see the all-time high zone and how it's reacted since then. So this officially is our new all-time high for NASDAQ, 22,135, right up there. Okay, so with an all-time high, some big seller came in the market and pushed it down up there. So what I'm doing is I acknowledge it, I verify it, I'm going to stretch it into the future. I can see that these daily candles just almost tapped into it. Did it trade into it? No. So then they officially lowered the offering from the all-time high supply, pushed it back down. We came into it again, lower high, lower high, lower high. So technically speaking, the daily is pushing down. Let's continue with this red box into the future. Will NASDAQ ever get back in trade in here? We're not too far away. Maybe tomorrow, maybe the next day, maybe Thursday, maybe Friday. I don't know. But as of late, it came in really strong green, and then they pushed it back down. That's a lower high. Again, it came like right in there. Again, it's a lower high. They pushed it down. Here's your gap down daily candle. Okay, these are your clue candles. Remember we saw that clue on the 4-hour? This is a clue on the daily. See where they gapped it down and it didn't even go down any further? It's a big bullish ignited candle. I know a lot of you guys made a lot of pips on this on the opening of the market, and it came right straight up back to that opening day, to that closing price, and continue to move up to about 50%, and it completely engulfed it. It closed relative to the high, engulfed that red bar. So what I would be doing right now is figuring out exactly where's 50% of this daily NASDAQ candle and just go through the motions again, okay? Do you guys understand what I mean by that? Right now, grab your yellow line. Where's 50%? Remember, Ron smoked a lot of weed. I'm going to say it's right around there. And then what I do is, to verify it, I look at the number, 21,575. Is that a number that I always talk about? Absolutely. If you've been on this call with me for more than an hour, you know that I'm always talking about 25, 50, 75, 100. 125, 150, 175, 200. Let's continue doing it. 225, 250, 275, 300. We're in an auction now. I'm an auctioneer. I can't speak with their beautiful fast voice, but I can do it with my chickmunk voice. That's my auctioneer voice. If you guys ever hear that chickmunk voice, that's me. I'm an auctioneer. That's me at the auction right now, okay? So those are the bids, the asking price, blah, 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 sold to that gentleman over there. So markets are auctions, guys. This is where transactions occur more than often. Why? Because they're nice whole numbers. We talked about this. If I go outside right now to buy a coffee, if the coffee is $2 exactly, I hand 2 singles if I'm in the US, or 2 loonies in Canada, or a toonie. It makes a nice easy transaction, and I get my coffee, and it's real fast. If you're in a drive-through, you want efficiency. You want to go because I got 10 people behind me that want coffee. If I'm sitting there counting dimes, like I got to go 10, 20 cents, 30 cents, 40, and I'm handing that is a waste of time and efficiency. So a lot of transactions happen at whole numbers. So that's why maybe you'll see nice pricing. If they priced it at $2.07 a cup of coffee, then I got to bring out change. and make change, and then they got to give me change back. That's reduces time and efficiency in the markets. The markets are not a coffee shop. This is where they're trading millions and billions and trillions of dollars of liquidity every second. Okay, so every second matters in the markets. It's profitability for big institutions. So they don't play games. Okay, they don't play Mickey Mouse games. They trade at psychological areas in the markets. Okay, so that's where I just placed 50% where I'm thinking where it is. But we don't need to do that. We can verify this with the beautiful Fibonacci tool from the opening green price to the closing daily green price right there. So all I did was opening price, closing price. Look at, guys, is Ron good or what? There's 0.5. Was I exactly on it? Now I can see it was 21,571.5. So I was off by 3.5 ticks. My apologies. Okay, so what I do now to verify, bring the yellow line exactly right on top and overlap my 0.5, right? Okay, so rule number one, we figured out 50% of yesterday's trading daily volume. If we're coming down red right now. So red right now, it's testing our 786. If it continues red, 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 we're going to test this 618. If we continue, now we're coming right into the psychological 50%. If we can't hold there, we may start engulfing red, bearish, and coming back down. However, if we're trying to figure out the zone, remember the zone rule, it now one line above and one line below. Then you can find your daily zone, just like that. There's my daily zone. Okay, I'll make it neutral so you guys can all see. Okay, so I just use the 0.5, one line above, one line below. Very simple. Stretch it into the future. The volume is above us, so this box will be green. That's it. And now, do you guys understand what I did? And I just based this off of the previous bullish engulfing candle. So what I'm looking for is if it comes down red, 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 I'm looking for buyers to either step in at the top of the green box, buyers maybe right there at that psychological midpoint, or buyers at the bottom. And then it comes back up. Maybe it comes back in with a higher low right there, and then it drives, you know, like a double bottom, like a W, and then it drives. There's the resistance. You can see the resistance. There's the rejection. There's the rejection. There's the rejection. There's the rejection on that big daily candle. So do I see any green body closing above there? No. Maybe it needs to come back down and pick up more volume and then come back up with that bigger leg, break through here, fill in those wicks, close above, pull back. This resistance will now be daily support, and then we drive to the all-time high. Make sense? Okay, we're not doing rocket science here. It's just very simple technicals. That's all we're doing, okay? But that's on the daily, okay? So what we're going to do is we're going to move to the 4-hour, okay? So you guys said it. NASDAQ is consolidating. You're absolutely correct. It's coming down, going back up, 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 you know, just back and forth. So we're in a massive daily consolidated zone below the all-time high supply and at this daily demand area. Will it continue to move upwards? If we look traditionally down here, it's got a higher low, higher low, higher low, higher low, big ignited bullish daily candle. We could still continue to move through here. Okay. However, it might start barcoding. Red, green, might come back down red. We got CPI news. We got Powell testifying in the markets. We do have some earnings this week. We got PPI news, and then we got the end of the week Friday. Okay, so there's lots going on. Don't be too surprised if the markets are choppy. You can clearly see how we're trading on the daily that it might in fact be choppy. Okay, so that's daily. Now what I would be doing is going to the 4-hour. Okay, now what I can do is I can leave my my daily fib on the chart if I like, and then I watch my 4-hour candles. Okay, so then we don't have to do anything. It was already done for us. So now naturally, here's our 4-hour candle right here. This one is live, just opened about 30 minutes ago. So there's 3.5 hours still to go on this. I'll probably be sleeping by the time this candle closes, but what I'll do is maybe I'll place an alert at the top here. Maybe I'll place an alert at the middle. Maybe I'll place an alert at the bottom. And then I watch to see if it trades in here, and then watch the 4 hour. Is it going to get like a bullish candle coming out like this? Is it going to come down here, maybe get a wick and close above here? Then I see it rejected in the daily demand zone. That's good. That's strong. And then maybe I'm looking for just an entry. I look for a pullback right here, maybe a double bottom pullback or anywhere in here. Then I take my buy, and then I'm looking to take out the previous resistance, maybe get it back up to these, fill in all of these wicks and drive to those highs. And then there you can see where we do have a lot of resistance. It's right there. If I was to place another yellow line just for reference so that you guys can visually see what I'm looking at right here, right there, body, body. I see the rejection. Remember, this is all-time high supply. I can see right here, it failed. It impulse, tricked the market, came back down, and then they really took out the, why? What's up there? You guys know what's up there. Remember, if you go in on a buy before a candle closes, then you are the one that's getting in drawdown. Okay, so remember, this candle came up green, 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 green. If you bought, and then look at how they slammed it back down. Okay, so there's liquidity above this yellow line. There's liquidity here. They didn't come up to get it. They lowered the supply. Maybe they got enough, and now they're dropping the market down. Will it come back up here at another time? Possibly, but we're coming down the last 4, 8, 12 hours. So it's retracing back down. Are we going to retrace back down into demand, and then we drive our way back up? So 4 hour candle too. If it closes above here, this yellow line might turn as support, and then we drive to the all-time high supply. Okay, so number one, what we could be doing is looking to potentially buy a pullback on NASDAQ. If we want to continue with the bullish trend, making these higher highs and higher lows, maybe we look to potentially buy somewhere in here, or coming out of here, we watch to buy a pullback in the green box. Okay, so makes sense, guys. What we can be doing all week is to watch this. Jonathan, you're still getting caught in fake outs. I've been saying this. Try and wait for the bar to close, and then maybe that will help you avoid getting faked out. It's not 100% guaranteed, but at least it will lower your probability of getting faked out if you're just going in on impulse trades. Okay, so that's NASDAQ. What we can be looking for is, again, a pullback into here, and maybe we make our way out of here, and then we are driving back up with the next leg up. Okay, but we also have to pay attention. If the 4 hour volume closes below this critical demand block, the market could be shifting bearish. I hate to say this, I don't want to be the guy that spoils the party, but I have to be real with everybody. I look at the markets both ways. Okay, I respect when it's going bullish. I respect markets when they're going bearish. I respect markets when they trade sideways. But I just want to show you guys all options, okay, to make sure that we're not just one-sided here. I'm showing what potentially could happen. Okay, so if the market really does, in fact, go down bearish this week, if these 4 hour bars are coming down here, maybe they do push out of here, but then they come up here and it's a lower high. Pay attention down here. If you get a 4 hour red candle that closes below here, I'm not going to change that zone. I'm just going to change the color of it because it could in fact turn to supply, and then the market is coming down and they're taking out that big weekly gap down, and then you can see where it could potentially fall down to. I would be aiming for just below 21,000 down in here, because there's structure right there was a neckline, the structure right there that turned into support, and it's still support. So you could see the market sell back down into here. Okay, so then all I would do is with that zone is I would just change it to red. That's it. I'm using this zone as my base of reference to swing off of this. I'm either going to swing in a buy if everything gets respected here, or I might swing into a sell if everything breaks down here. Do you guys understand what I'm saying? So I don't want to make it look like I'm just a one-sided trader and that's it. That's all I'm doing. I'm using this block as information to let me know whether it's going to hold as demand, or it's going to or maybe turn to a reversal in the market and we might be pushing down. Okay, so for now, I'm going to make it a green zone and look to buy off of this. Okay. And then for further move to the upside, if we get 4-hour green volume closing above this yellow line, that could turn into a supporting line. Like if it pushes back up green, 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 close above there, could utilize this as support now and really drive. There's your all-time highs. Okay, and then easily make it right back into the all-time high and take out the all-time highs. And the markets are continuing to drive. Okay, so we just went through tech earnings. Maybe allow the market to digest that information. Maybe analysts will give upgrades on NVIDIA, on AMD, on SMCI, on a lot of the chip manufacturers. Maybe they get upgraded and the market is awaiting to buy a pullback and continue to drive. Okay, could be an option. Okay, so we'll watch NASDAQ over here. I'm just going to place an alert in there to give me just in case it comes in there, gives me reference. So you see what I did there? Right at the midway point, I can also place an alert at the top and the bottom, but I placed it right in the middle on that line. So I put myself an alert. If the volume comes down here, then I'm alerted, then I can watch it, I can see what's happening, and then I can justify whether I'm going to buy off this or I can sell off of that, okay? But generally, trade with the trend. The trend is our friend, and the trend is bullish. So number one, I'm looking to buy off of this zone, okay? I want to buy a pullback. Okay, so let's finish off with US 30, Dow Jones. This is one of my particular securities I enjoy trading. Why? I don't know why. Just like the way how it moves. Particularly for scalping, I tend to scalp on the lower time frames, and I do like the way how US 30 moves for scalping. There are some securities that you're gonna figure out that it's your style of trading and you enjoy trading it, and then every single day you keep perfecting your skills. And it might come to a point where you'll have your favorite everyday security and you don't need to trade any other securities. You can stick with that security if you're really paying attention to it, you're really learning it. Sometimes you're going to memorize the levels because you look at the levels so much that you're going to know the numbers off by heart. You don't even need to do any charting. And if you're making money off of it, why break it? Continue trading it and perfect those skills and get to know it more and more and more, where you feel confident trading it any time of the day, any session, whether there is volatility or there isn't. Okay, so let's continue with exactly what we're doing on the daily. What is the overall trend for US 30? I'm going to say it's bullish if we look at the overall. Okay, it had a nice rally to the upside. There's two tops there, but then when it pulled back, didn't really break any structure, just pulled back naturally, continued to drive out of here for a new, I'm just using the entire chart, like a new higher high. Again, there was a bearish pullback, didn't really break through or close below anything, didn't have like, it was kind of a build of a left shoulder, head, right shoulder, but right away it got shot right back up. Again, another pullback, resistance turns to support right there, continue to drive. Now we're at the all-time highs. We've tested them. We actually have two tops now for Dow Jones, on an all-time high up here and then another all-time high. Now we have to really pay attention to what's going on here, because now it's consolidating off of the second top of the all-time high. So number one, let's start off with some easy zones that we can figure out. First zone is this all-time high right up there. Okay, so I can capture it. A lot of you guys have questions, Ron, what's the size of the zone that you do? Just kind of, eyeball it or figure it out, freestyle it. Just look at the highest point, obviously the all-time high, the highest point, 45,091. And then what I do is I just bring it down to where there's more bodies, where there's a body, there's a body, a body. There's a wick, a body, a wick, a body, and a body. So that size of that box is perfect. And then I can see where it broke down red. Look at the retest right there. This is where you could have potentially sold the market. Right here. Like, there's your sniper trapping gap. Did any green volume close above? No. Did a red bar close below? Yes. Verified. Not just a fake out like that. It actually closed right below. Did it come back up green, green, green? Right up to the box? Yes. Did it get rejected? Yes. Could you potentially have taken a sell there? Absolutely. Could you, if this was a 5-minute setup, same shit. I would have looked to take a sell. If this was a 1-minute setup, same shit. I would have looked for a sell. If this was a 15-minute setup, same shit. I would have looked for a sell. If this was, do you guys understand what I'm saying? If this was a 1-hour setup, same shit. Candlesticks all have the same characteristics. Nothing is different. Okay. If this was a 4-hour setup, same shit. Look for a sell. If this is a daily setup, same shit. Look for a sell. You have all the verification that you need. You have all the confirmations. Okay. So I personally didn't take the sell at that time, but would have been a great sell. So now that we've identified the zone, why do we stop there? Why stop? Did you guys understand what I'm saying? Bring it into the future. Now, again, we had buyers of Dow Jones trade in our red box. Did they close it above the all-time high? You tell me. I don't see any green volume above here. They brought it back down. Now it's getting real choppy. Look at those 2 green wicks. Guys, you're telling me tweezer tops and tweezer lows? Like, come on. How does the market, you're telling me the market does that just, that's it, by chance? Let's clap our hands and it's, like it's Mickey Mouse shit? Come on. Like, you're telling me the entire Dow Jones on the daily volume can come down to the exact tick and not make a new lower low in the market? Tell me how this is not humanly possible. So this is all robotics. This is your HFTs. This is your high frequency trading. This is who we're trading against, guys. We're not trading against human beings. Just to make you guys aware. If you guys think you're trading against a human being, you're out to lunch. You're trading against a robot. Okay, high efficiency robots. You're trading against a computer that has no emotions. You're trading against a computer that can trade 24 hours a day, 7 days a week, 365 days a year without taking a break to take a piss. You're trading against this. Okay, so understand that a robot doesn't have emotions. If a robot doesn't have a shitty day, a robot doesn't have a child that's sick, a robot doesn't have a day where it loses money and it has to think about it. Okay, understand this. Once you understand this, you're going to start to understand the game of trading. Okay, so listen to Uncle Ronnie, what he's saying, and pay attention to this. These are clues left behind in the market. If you fail to pick up on them, that's on you. It's not on me. Dave and I are trying our best here to showcase this to you guys in a live environment, back testing, and how shit will happen when it actually happens here this week. If we see stuff, then we can talk about it. But we cannot ignore the fact that it did come down here exactly on this date, Monday, January 27. It dropped. The buyers were here to bring it right back up. Then again, it dropped Monday, again, 1 week later, one Monday to the next Monday. Tell me how that's not by coincidence. And it was at the same exact spot. How did they not just drop it just a little, couple ticks below? Because the market didn't intend to. It made up its mind. It doesn't need to. And we came back up again. This should have been a breakout to the all-time high. If you ask me, look at this setup. You got these 2 rejection wicks, basically in that golden zone of that nice big body candle. Like, this is a beautiful setup in my opinion. You got a nice bullish pin bar candle. It came down again, pushed back up. You have a strong bullish candle that opened. It closed right at the high. It opened and drove. And look at it. Again, right there, they dropped it down. But look at how slowly it's trying to make its way back up. But every time it's coming up, they're pushing it down. It came up again last Friday. They pushed it down. Okay, so then we had a big open this week. It came down, higher low from these tweezer bottoms. It came back up strong. But again, look, it failed to make some significant highs. Again, the sellers pushed it right back down. So we just have a little bit of green volume in today's daily candle on US 30. And look at what they did. Look at how today's candle opened. Bearish, ignited. There was no buyer in sight to even try and bring it up. The sellers are right there, right from when it closed, and now it's trying to engulf all of yesterday's green volume. If we lose this point of interest, then the market could drop and fill this wick and take out those 2 tweezer low bottoms. unless the market is going to hold and sustain and come back up for another rally. If we lose all of this, believe me, guys, no one trades Dow Jones probably more than me in this group here. We could see a significant reversal in the market. If we lose this support, look how much more room we have down where the market can sell back down to where we have, again, I figured out a red box, so I need to figure out where I can make a green box. Okay, so it's real simple, guys. Just look at what the data is telling us. Okay, the data is telling me right here, when that green body candle closed above, I should have flipped my box green at that time. Okay, if I didn't, now you are. Did you bring it into the future? Yes, no, maybe so. I don't know. I always bring things into the future. Okay, so it came back down. If you had an alert there, you could have taken a buy off the daily or 4 hour and been part of that big move. Okay, maybe you didn't. Okay, I understand. Shit happens every day. Maybe you had a day at work, you couldn't look at the charts. Maybe your kids were sick, you didn't look at the charts. Maybe you just are taking a couple days off the markets and you missed it. It's okay. Always be patient and allow the market to come to you naturally. Stop forcing trades that are not there. Who wants to trade all this bullshit up here? Not me. I'm waiting for something to develop down here, and I'm waiting for something to develop at the all-time high, or I'm waiting down here, dry powder, waiting to buy the stock market if it dips down here. Waiting. I got security watch list. I'm watching a shit ton of securities that I'm looking to buy on discount. Just like when you have Boxing Day after Christmas and you go to the malls and there's 50% off sales and you go run in there and you're walking out with 20 bags. You're going shopping. I'm doing the same shit, but I'm doing it in the markets. I'm looking for good buys on A-plus securities on discount. If I don't get that opportunity, it's okay. I'm not stressing out, but maybe that opportunity might come a month from now, maybe 2 months from now, 3 months. But I want to be ready so I don't miss that opportunity. I don't want to be that guy that says, oh, I woulda, shoulda, coulda done that. I want to be that guy that buys that box, that green box. Okay, do you guys understand what I mean? I want you guys to be the person waiting down here to potentially buy this green box. Or we sell below it. If this structure cannot hold, yes, I hate to say it, the market could potentially reverse and sell off. And then you're going to hear all about it on the news. Every news channel is going to say market crash. Oh my God, it's the end of the world. Armageddon, this, apocalypse, all this shit is happening. You know, if you're a real trader and you're a real investor, you're licking your chops. You're looking for opportunities to buy low. Believe me, institutions are waiting. Why are you? Why are you not? Okay, so don't make excuses. Okay, there's always opportunity to buy and sell, but the best positions are for those who wait patiently for those opportunities. This will separate you from a real beginner trader, you know, in your learning stages, to more of a trader that understands how markets operate. Okay. So remember that, guys. Do you guys understand why I take so much time explaining things? Because everything I explained here, this chart could be exactly on a 1 minute. This chart, these candles could be exactly how 5-minute candles look. This chart could be your 15-minute candles. Okay, we're just on a daily. Okay, but now what we're going to do is we identified a few levels in here. Do I have one other level? Look at it right here. Like, how does this level not stick out to us right here? Just look, guys. If you have to, guys, smoke some weed. I'm telling you guys. Move to Canada. It's legal here. I love America, guys. Noor, I love you. You're in America. I love you guys. I have my relatives in States. I got my best friends in the States. I travel across the border, go to Detroit. I go to Buffalo. I come visit. I spend my money in the U.S. Like, we are good people here in Canada. I don't know why Trump is targeting us. Why? Leave us alone. Leave us alone. We're good friends. We're your allies. We're your friends over here. We help you guys out. No problem. We're here. Look at us, friendly Canadians, helping out you guys in trading as well. Okay, but trade tariffs are not good. Ask a trader about tariffs. They're not good for anybody. They're not good for who's placing the tariffs, and they're not good for the receiving country. They're not good for us in Canada, and they're not good for you guys in the US, because ultimately you guys are going to pay the price for it. You know, if he puts tariffs on anything coming into the US, you guys unfortunately are going to have to pay for those when you go to the grocery store or you go buy those products. You know, that's who pays for it. So it's I hope he doesn't do like you know, there's wars, guys. Okay, there's physical wars that happen. Some of you guys are aware of Russia, Ukraine, physical war. Some of you guys are aware of what's going on in the Middle East. There's a physical war over there with soldiers, you know. But there's also trade wars, tariff wars. There's AI wars, where you guys sleeping a couple weeks ago when China introduced DeepSeek AI and Nvidia took a big haircut where NASDAQ took a $1.2 trillion haircut. Okay, so I'm reading right now that a hedge fund shorted Nvidia when they released that information about DeepSeek, and that's this is a corrupt game we're we're involved in, you know. So we could be turning into tariff wars for multiple countries around the world. We could be turning into tech wars, AI wars. Be prepared, guys. That's why there could be a lot of volatility in the next few months. You know, anything can happen. We're in different times right now. But this is a good level right over here. See how it was resistance? This big body candle closed above it. If we did, in fact, at that time, make it green, we would have maybe caught this break of structure. But look at the candle, how it came back up and closed green, and there was your pullback day. Could have bought, and then there's your next leg up. Again, it came right back down red. Technically closed below, came back up. There's red, push back down. Here we have a 3-bar play where it came green, red inside, and then we broke our way out of here. So again, if you miss out, you don't need to chase. Try and wait for the pullback. Maybe if you waited here, see here, red, 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 it came right back down to the green box. Could have bought there for that potential fill back up to the all-time high supply. Okay, so I'm making this box green. It's still representing higher low demand. Okay, now on the daily, we're just consolidating red, green. We opened bearish, ignited. Technically, we could see a bearish day. Going through this Asian session, going into London, and then we'll see what New York's reaction is going to be. Because if we're coming down, this looks like a 3-bar play where it's red. Look at the green bar, about 50% below the red body candle right here, and we're opening ignited red, pushing down. So this has a high probability of continuing to drive down and drive right down to here, to where the point of interest, where the red body and the green body candle closed on the daily, right there. And then we see what happens. All we have below this yellow line is a wick and a wick and a wick. So are we going to get another fake wick come down here and then maybe it flips up green going into New York? Then we could definitely be going up green, and we're driving our way back up to test this all-time high supply. How many times have we been rejected in here? Count with me. 1 time, 2 times, 3 times, 4 times, 5 times, 6, 7, 8, 9, 10, 11 times. So far it's been rejected 11 times, and it looks like it's the second top. Okay, if I look at this huge leg coming up, all-time high, one top, there's our big bottom down in here, and then our big leg coming back up. This whole kind of situation up here looks like the second top, and now we're coming down. So if we close with red volume, like this is a daily pushing down, but what we're going to watch is the 4-hour. If we get a 4-hour bar close below that yellow line and retest it, we could be selling back down to fill those 2 tweezer wicks right there, and then watch to see what happens exactly at this yellow line, 43,843. Will it hold, or will it come back down in here? Then maybe that's where the big buyers are, want to drive it back up. And then see that's a higher low from down in here. Maybe enough volume, higher low, depth of market switches, and then has enough momentum to take out that all-time high. However, if the market is bearish and it pushes back down and closes below here, same situation. That box, I make red. Then I watch to see the buyers. Can they bring it back above and retest this? Yeah, hell yeah. Then I'm looking to buy that. But what happens if when they're bringing it up, they fail and they get rejected? Then unfortunately, US 30 might come all the way back down, trickle down in here. And that might be a possible buying opportunity. And then we go through the motions again. Will it hold? Will it close below? And then we officially enter a reversal in the US stock market. And then we'll hear all about it on the news. It's going to be on every news channel. It's the end of the world. But I'll be looking for opportunities to buy certain securities. I got my watch list. I got my shopping list. I'm looking what to buy. There might be some really nice securities on discount. Okay, so daily. It's hard to say right now what's happening on the daily because it's kind of just clustered in here, just trading again. But what we'll do is we'll bring it down to the 4 hour. Okay. So kind of maybe what we'll watch is where we'll place our fibs, okay, is maybe on this leg up where it came down here and then we officially started our higher high launch, pulled back. There's that tweezer bottom. I can tell you now the time. It was Monday, January 27 at 2 a.m. Eastern, right before London, okay, and then we continued to move up to the all-time high. Tweezer top highs at that all-time high. They pushed it all the way back down. There's kind of all the bottom at this yellow line. Continued to drive back up. Again, failed to make a new higher high. They brought it down and pushed it all the way down there. I don't see a 4 hour red candle closing below there yet. Maybe later tonight there might be. Okay, so what I'm going to do is place my Fibonacci from this low to continue with this trend that's moving. It still has not broke here, so it's still considered a higher low. We pulled back there. It's still considered higher low. So it could definitely turn bullish and we continue to drive. Okay, so I'm going to take my Fibonacci right here at the bottom of this green box, stretch it to the highest all-time high point, right up to the top of that red box. And now I get my 4 hour Fibonacci levels. See the 618? It's kind of right equal with my daily position there. So that's where I'm placing an alert there. I'll place an alert if it gets down there on the 4 hour. I might be looking to buy off of that. Okay, and then you see, look at in between here, guys. See the 0.5 and the 382? We've got our green block right in between that. So we've kind of, the zone that we created on the daily. Now you can see how it kind of compares with your Fibonacci. So this is where you can kind of get some confluence. So that might be a good buying opportunity if it sells off all the way back down in there. That's where maybe you might want to look to buy out of there. Maybe if you get the second bottom, that might be the more powerful leg with more volume to continue to drive back up. Okay, but the volume is nowhere near there, so we got to focus on what's happening up here. Number one, what are we focusing on? Okay, so if I look at the last successive 4 hour highs, I got a lower high, traded right into 50%. Look at this big red candle. Okay, doesn't matter the time, whether it's a daily, 4 hour, hourly, 15 minute, 5 minute, 1 minute. It's abnormally larger than all of the other candles. What I would be doing right away when that body closes, I would be eyeballing where's 50% of it. That's just me. Okay, I think 50% is right there. I look at the number, 44,600 on the dot. Perfect. Okay, and then I can see how it came green, right into there, and then they rejected it and then shooting it back down. Okay, so it is making lower high, lower high, lower high off of the double top all-time high. So it is consolidating. We do have buyers that are continuing to push it up, but we also have to respect that sellers are pushing it down. Remember, you got to look at both sides here. Okay, but this is an area that I'm watching right here, 44,300. I'll be watching this tonight. So I'm placing an alert right at this yellow line. It's probably going to get tapped, maybe on this call, maybe not. Okay, but do you see how no 4 hour volume has closed below here? It's been impulsively broken down, but back up. Impulsively broken down, but back up, retested it and drove. Okay, again, this candle this morning broke through here and then came right back up. So I don't see any closing volume down here. Okay, so what I'm looking for is if a 4-hour red candle continues to drive down here and officially close red below here, then what I'm looking to do is sell the pullback. So if it closes below there, for example, and comes back up green, 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 I'm watching this yellow line, 44,300. If this is going to act as the resistance and push it down, that's where I might be looking to sell. And then I'm looking to physically take out that wick and drop down to this yellow line. Okay. And remember, this is a swing trade. So maybe when it comes down there, I might just be taking my stop loss back to break even, right? Because maybe this thing wants to even go lower. And I want to swing this for maybe a couple days if the market is actually reversing and going bearish. But what I do is I always measure my lines so that I know what to do. I'm already creating a plan in my head before it even gets down there. So if I sell that yellow line and it comes down to the next yellow line, that's 500 pips. 500. That might be your weekly swing goal, for example. 500 pips is fantastic for a swing trade. That might be your weekly goal and you're done. However, if you do want to continue with the trade, you don't necessarily have to close out the entire trade. You can leave runners. Okay, you can leave runners. Runners can continue to bank profit for you if they continue to run in your direction. Okay, but there's something that needs to be done down here is what I'm trying to say. You can either, if you have a stop loss, you can maybe bring your stop loss to break even. If you're up 500 pips, maybe close out 50% of it. Secure 250 pips and let the rest run. Okay, but just do something. It's got to be where you're managing your risk and you're managing your profit and you're managing your capital. And maybe if the trade continues, who knows? Maybe it just comes down here and just continues to bleed out. Sometimes it's coming down here and just continues to break down. And then you get that big move. Okay, so, but that's the first reference area I'm watching because I can see in the market in the past how it came down roughly right around that yellow line and went back up. Again, roughly right around. So you see now what I do? I look at those 4-hour wicks because I see they come down almost to the yellow line and go back up. They come down almost to that yellow line and then they go back up. What happens? This would be, oh my God, this would be disgusting. I don't know what I would do here. Imagine the trade comes down red, red, red all the way right there. You're up 430 pips and you're trying for that extra 50, 60, 70 to come down to that yellow line. And then the market does this to you and comes right back to where you entered. Oh my God. That's disgusting when that happens. Believe me, that happens to me scalping the markets. I do the same shit when I'm scalping on the 1 minutes, on the 5 minutes. I'm trying to get those extra 3 pips or 5 pips to hit that daily line. And then the market kind of teases me with just 2 or 3 pips and then goes right back and hits my break even. And I'm looking at myself. I'm like, for an extra 3 pips, I got greedy for 3 pips and I just gave up 30. So, you know, you don't want to do this on a swing trade and give up 400 or 500 pips. So the market is telling us something. Can you guys anticipate what I'm going to do right now? Seeing what I see right now, what am I going to do? You guys tell me. I know what I'm doing. Can you guys kind of tell me what you think what you should be doing here? Okay. If you guys don't know, I'll do it for you. Okay. The back testing, the data is telling us exactly what happened here. So why don't we prepare ourselves and get, demand zone. Same, just draw a box, guys. Use your yellow line as your point of reference and then look at that wick right there. That wick right there. Okay, I'm going to make it neutral so you guys can see what I'm doing. Again, if you guys don't see what I'm doing, smoke a joint, please. You can get yourself a THC vape to keep it more discreet, to keep it more professional if you like, or you can actually smoke the flower. But do what you got to do, but look. Just look at this. That wick right there. I'll tell you the exact time and date. What do we got here? This is Tuesday, 6 a.m. That wick. If you bring this box across, see that wick? Right there. Monday, January 27, 2 a.m., right before London. It came in there and went right back up. If I still draw that box, look at, I got 4 touches. A wick, a wick, a wick, and a wick. So let's now draw this into the future right there. That's what I'm saying. If the market breaks down right there, what happens if another wick happens right there and goes back up? Then you're pissing away all that money. Let's not do that. Let's be smart. Let's make this as a green zone, and to let us know 4-hour demand is right there. 4-hour demand is right there. If it does come down red, 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 what happens if, in fact, this is the kind of the third bottom where the big buyers are? If it, in fact, breaks down and we close below there, then guess what? If it closes below there, Noor, we take that box and we make it red. I know, Noor, you hate selling the markets. I know you just love buying, but we got to go through the motions, okay? We got to go through. If we still want to buy, okay, we can still buy, but we got to see, is it going to be a fake out down here? Are they coming down here, grab that money, and then they're coming right back up, and guess what? Maybe it's retesting right here, and guess what? We're going back in a long buy. Okay, we're just stretching that box across. If it comes down there, because we know maybe the market wants to come down there, they know that there's a lot of pending orders down there, could be a fake out. They take out that entire zone. They haven't in the so far. So maybe they're going to take it out, and then it comes right back up, closes green. We got a retest. That zone, again, I know it's tedious. You're flipping zones from red to green and from green to red and all that. But sometimes you don't even have to flip the zones. Okay, once you understand this concept, you can keep it neutral, and then you just follow the volume. Is the volume below or the volume is above? That's it. And then if it comes back up there, then we know that they took out the low, they grabbed the money, they closed it above, we're waiting patiently to buy again the green box, then we buy and we place our stop loss below here, and we're driving it right back up to resistance. Okay, and hopefully maybe the buyers can take it to all-time high supply. Okay, so the beauty about 4 hours is you can take your time. You can take your time. You don't need to rush your trades, but what you got to do is you got to figure out your zones. Okay, I know it takes a lot of time. We did 2 hours on this call, but normally it shouldn't take this long. Like when I'm doing this, I'm not explaining to myself what I'm doing. I just go through. I could, if on Sundays I do these 4 charts, I can get these done 5 minutes a chart. 20 minutes, I'm done. That's it. I'm prepared for the entire week. It doesn't take me 2.5 hours to do this, but I'm explaining as you guys are asking questions. So number one, okay, I'm looking to short below this yellow line. If the 4-hour candles cooperate, okay? Again, I'm not saying that I'm just going to enter in on an impulse. Okay, I'm looking for a break of a red candle. I'm looking for a candle to close red below. Okay, and then maybe possibly looking for a pullback back up here, then I'm looking to sell that back down there. However, if this yellow line still holds, okay, if it still holds, I might be looking to buy off of this yellow line. I'm using the yellow line as reference. What happens if I do get a break? It breaks, it's red, 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 and then it comes back up and closes above. Same situation that we were talking about down there. Closes above, and then I get a pullback. I might be buying that yellow line. Then I go into a buy to take it back up to, fill that wick and drive back up to this all-time high supply. And then I'm looking to buy up here. Okay, so I'm either buying or selling depending what happens around 44,300 this week. It might develop later tonight. It might develop in New York tomorrow. Okay, it could just continue to consolidate in this range, like right in here for a little bit. Okay, if that's the case, I'm not going to force the market to like I want it to go bullish or I want to go. I don't know. It might just go up green, come back down red, go up green, come back down. Again, we might be in a sniper trapping gap, and then we figure out, is the volume going to close above, below? We're watching what's going on, you know. So anything can happen here. Okay, but I want us to watch these levels, and then tomorrow's call, we'll come back on, we'll review all 4 charts, we'll review gold, we'll review oil, we'll review NASDAQ, we'll review Dow Jones, okay? And we'll see what happened. Maybe trades have activated. Maybe we are in a trade, but we'll watch, and I need you guys to watch as well. I need you guys to monitor. And then tomorrow what we'll do is we're not going to continue to do this type of analysis because the analysis is already done. We're going to leave this analysis how it is the entire week, and we're just going to watch how the volume trades at these levels and see what we could have done what we can work on, how it reacts at these levels. And then tomorrow we'll add 2 more securities. We'll add S&P 500, and we'll add maybe a forex pair, maybe GBP USD or Euro USD. You guys pick one of those, and we'll also add that on our list. Okay. And everyone on YouTube, guys, thank you guys. We do have our free Telegram channel for you guys. It's pinned at the top of YouTube. Everything we do here at SST is available for you guys. We have this promotion going on right now. It's 50% off on our premium 3-month. Okay, it's normally $500. It's on sale for $250, and we'll pay the taxes. We'll absorb the taxes for you guys, and we're giving away adding a 10,000 Fixify account in for free, which is $100 value for you guys if you want to trade with a prop firm and test out your trading and things like that. And this account gets you all of the live sessions in the Zoom with Dave and Borex, and all of the trade ideas, signals, all of the education, and part of the Discord community, and everything we do at SST. Gold, big red candle. Okay, so it's coming down. It's made its move. It made a high so far of 29.42. Okay, did we get it up to that 29.50? Not necessarily, but now it's coming down. Look, it came all the way down. Now it's coming up. What I would be doing is, I know I'm not, probably if you're going to stay up, is watch how this 4-hour candle closes. I know there's a lot of time on it, 2 hours and 43 minutes, anything can happen, but watch and see if this is a big bearish engulfing candle. Okay, maybe allow us to maybe get that pullback buy. If it closes below here, maybe we'll look to sell below here, but use these levels as particular points of interest to take trades off of according to the candle at the closing of the candle. Okay, don't just go in because sometimes you see it come down red, because it can come down and go right back up, and then you're in trouble. So when in doubt, wait it out. Wait for the candle to officially close. Okay, and if everyone can hit the like button on YouTube, we do appreciate it, guys. We're gonna put share the link of, yeah, I'll give you the link, guys, and then I believe the link will have all charts for you guys. 1 second. Okay, so the link is provided for you guys in the Zoom chat. Okay, and everybody, it was just the start of the week. Okay, so we went over news, we went over the earnings this week. Pay attention to the days that have red folder news. Pay attention to the days that have Powell testifying and speaking. You know, you got to watch Donald Trump with what this gentleman says all the time. He can say some wacky things, and markets can go up or down with whatever he says. So you have to, whether you like him or not, whether you're a Trump fan or not. Okay, I'm not into politics here, but I'm telling you, he can move the market. Same with Powell. Whether you like him or not, he can move the market. So whatever security you're trading, whether it's gold, oil, NASDAQ, US 30, S&P 500, or individual securities in the stock market, you have to pay attention, okay? Especially at these times. There's a lot of news on every day, every week. How long is this going to last for? Who knows? But you have to be prepared for volatility in the markets. The only way that you can protect yourself is by trading with the right risk management. I would, for example, lower your risk this last week, this week, maybe next week, because if you're not ready and there's volatility, you could blow up your account. You could give away all of your profits. You got to be smart. Especially this time. For the next few weeks, you have to be very, very risk averse. Okay, don't do anything silly that you're going to regret, because believe me, it will torture you and kill you in these markets. Remember, institutions have much more capital than you and I. They can do some crazy swings and really, really destroy you and I as retail traders. But for them, it's nothing. You know, they're just coming pick up liquidity at these levels. But for you and I, if we're over leveraged, we're destroyed. Okay, so be smart with your trading. Everyone, thank you guys. Let's all go get some rest, and we'll see you guys tomorrow evening, same time, 7:45, 8 p.m. Eastern. Join us. and we'll see you guys tomorrow. Thank you guys. If I have some time, I'm going to post these charts also in the Discord under 4-hour setups for you guys, okay? In the Discord signals section, right over here. Let me just go over here. So the Discord should have a 4-hour swing trade right over here. And then I'll upload the charts in here for you guys, okay? So they'll be in here. Okay. I'll get that done right after the call, Nagraj. Okay, everyone. So thank you guys. Tony, I appreciate you guys as well. Thank you guys. We'll see you guys tomorrow. Enjoy your evening. Enjoy your night. And we'll see you guys tomorrow. Thank you guys. Have a good night, everyone.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.